RBI has decided to cut interest rates by 0.25%. The RBI that has unveiled the credit policy, we have reports coming in that the interest rate has now been cut by 0.25%. We will be cutting across to Mr. Subba Rao to give us more detail.
To this third quarter review of monetary policy for 2012-13. Earlier this morning, we put out the policy review document based on an assessment of the current macroeconomic situation. We've decided to reduce the policy repo rate under the Liquidity Adjustment Facility, LAF, by 25 basis points, bringing it down from 8% to 7.75%. Consequent to this, the reverse repo rate under the LAF, determined with a spread of 100 basis points below the repo rate, gets calibrated to 6.75%. Similarly, the marginal standing facility MSF rate, determined with a spread of 100 basis points above the repo rate, and also the bank rate, stand adjusted to 8.75%. These changes have since come into effect immediately after the announcement. We've also decided to reduce the cash reserve ratio CRR of scheduled banks by 25 basis points from 4.25% to 4% of their net demand and time liabilities NDTL, effective the fortnight beginning February 9, 2013. This reduction in the CRR will inject primary liquidity of around 180 billion rupees into the banking system. Today's decision to ease the monetary policy stance was informed by three considerations. First, both headline wholesale price inflation and its co-component non-food manufactured products inflation have softened through the third quarter. Several indicators such as the weaker pricing power of corporates, excess capacity in some sectors, the possibility of international commodity prices stabilizing, as well as inflation momentum measures suggest that inflationary pressures have peaked. However, further moderation in inflation going into the next fiscal year is likely to be muted, as the correction of underpricing of administered items is still incomplete, and food inflation remains elevated. Accordingly, the setting of monetary policy has to remain sensitive to these conflicting pressures and attendant risks. The second consideration that weighed with us was that growth has decelerated significantly below trend through the last fiscal year and through this year so far, and overall economic activity remains subdued.